Good Wednesday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming in and checking out the Market Chameleon pre-market show with myself, Will McBride, and the main man. There he is, Dimitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer? It's up there for everyone to read.
Yep. Before we get started, keep in mind, everyone, that Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker-dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer. Yeah, Will, I think your thing, like, minimized.
Yeah, sorry about that, D. See you now?
Yeah, but yep. So let me share my screen. Maybe just let go for a sec.
Yep. There you go.
Nice. Yep. And if you guys are joining us for the first time, and you have any questions, put those questions in the live chat. Will's watching and he'll read them back to me. If you want to come on a show live and ask a question, we also put out a link to Zoom. It's on that YouTube live chat. If you click on it, it takes you over to Zoom. Once you get to Zoom, click on raise your hand. You don't have to turn on your video camera, but we'll be able to hear you and you could ask your question directly. So if you have questions about Market Chameleon tools, data, analytics, strategies, you want to come on the show and ask those live, you're welcome to do that. While we're waiting for questions to queue up, we'll start looking at the pre-market report, maybe get some insights on the earnings front. And if any questions come in, I'll stop and we'll take those questions. Okay. Well, I think you're on mute, but we'll start there. So this is the pre-market report, and these are stocks trading in the pre-market hours. We have our most active stocks, biggest percentage gainers, biggest percentage decliners. Coming down here, I see 142 stocks on our percentage gainers list, 45 on the percentage decliners list. So from that perspective, we're looking like a more bullish bias at the open. I'm going to filter out this list to just S&P 500 stocks to see what's going on there. So we're going to take out any low cap stocks, preferred stocks, ETFs, leverage products, really try to just focus in on the S&P 500, which that's drives the market, and see what's going on there. To do that, I'm going to use the filters above. I'm going to drop this down in ETF. Here I see a list of ETFs. By selecting one of these ETFs, the list below will get filtered by the holdings in that ETF. So SPY, that's the S&P 500 ETF. Let's select that. Now, these are the holdings in SPY, which are the S&P 500 constituents. And we see here 30 stocks made our percentage gainers list, 4 in the decliners. So we are setting up for more bullish bias at the open with this list as well. I see a couple earnings coming out. So when we look at this list, here we have the symbols, stock price, percentage change. So this is the percentage change in the pre-markets from yesterday's close, the volume, and then these little alerts. We have an E that stands for earnings. And there's news. If you hover over it, you kind of get the headlines over there. So PayPal reported earnings yesterday after the market closed. So that is reacting today in the pre-market hours of 14.2%. If we have no questions, I might have lost Will here, but if we have no questions so far, what I will do is take a look at some of the earnings insights for stocks that already reported. So up here under earnings menu, let's take a look at earnings stock moves. And this is tracking the performance of the stocks after they reported earnings. So stock reports earnings, they issue a press release usually, you see their income statements, you see how they performed in the last 3 quarters. Management will sometimes give you some guidance, take questions, and then the stocks will react to that. So we're looking at right now is that what is that reaction after the earnings was reported? And I think Will just texted me that he lost power. So I think it's just, so if you guys are asking questions, I don't see it. Usually he monitors that. But let me just really quick. Let me see if he is able to come back in. So I don't see, if you guys are asking questions, I'm going to keep going. And if he comes back, then he'll take those questions. But he is texting me right now saying that he is trying to come back in. So again, this is looking at did the stocks react positively or negatively after the report. And here we see in the second quarter, out of the over 1,500 stocks that we tracked, 56% of those stocks ended the day higher, 40% lower. Some of them were unchanged for an average gain of 0.6%. And just compared to the 3-year average, we could see here we are right now in the second quarter, 56% higher, 40% lower, average gain 0.6%. On a 3-year average, same stocks, 52% of them are higher, 47% lower for 0.3% gain. So far, the reaction has been more positive than the historical averages. So let's take a look at just S&P 500 stocks, how they're performing. I drop this down, SPY holdings. I'm going to reload. And here we see 328 stocks that we tracked so far, second quarter. 58% of them had a positive reaction, meaning the stock was higher after the report. By the end of the day, 41% lower. On average, they gained 0.5%. So coming down here, we can see here, this is here, second quarter, we're in right now. If we compare it to the same group of stocks on the 3-year average, 52% higher, 48% lower for an average gain of 0.2%. So from a historical perspective, so far the stocks have been reacting more positive than the averages. And here we are right here, second quarter, you see up 0.5% on average versus 3-year average, 0.2%. And this is the history of the same S&P 500 stocks. If we come down here, we kind of get a distribution. So here we could see 59.5% of the stocks were higher versus 3-year average, 52%. If we go to the extremes, stocks that gained over 12%, right? Let me see here. That's a little bit below the 3-year average. 1.2% of the stocks gained over 12% versus 1.7% 3-year average. And here's on the other side of the extreme. So we could probably come down here and see it. So over here, these are the buckets, 15% or more down, or stocks that gain more than 15%. These are the extremes in the S&P 500. So you can see only one stock did that so far versus on average 2. Stocks that lost more than 15%, that's 3 of the stocks versus on average, 3-year average, 2 stocks. So you can see not a lot on the extremes right now. Let me take a look at the QQQs. So this will look at the Nasdaq 100. So S&P 500 so far been doing pretty good for the earnings season. Let's take a look at Nasdaq. So this is QQQ Nasdaq 100. And that looks to me like they've been doing pretty well as well. Let's see, 57 stocks that we track, 63% of them were higher, 35% lower. average gain of 0.9%. And compared to the 3-year average, 0.3%. So they are performing much better than historical averages so far in the earnings season. And here we have a historical view of it. Right now we're here, second quarter. You could see on average, those stocks have gained 0.9%. Here's a 3-year average, 0.3%. And that's following, you can see 1, 2, 3 quarters of negative performance. I'm going to come down here just to look at the extremes. And here we see down 15% or more so far. Only one stock did that. That's consistent with the 3-year average, and up more than 15%. So far, we haven't had any up to now. So I'm seeing Will's texting me. He's watching if you guys are asking questions. Let's take a look at the straddles, because we're very options focused, and how have the straddles been performing. And when I talk about the option straddles, we're looking at if you're buying a call and buying a put at the at-the-money strike, you need the stock to move by big enough percentage to cover the cost of both options, either up or down, right? So let's see how those straddles performed over the earnings period. So here's straddle performance. And what we're seeing is how many of the straddles were positive from the buy side, how many of those straddles were lost value. In other words, the stock didn't move enough, and the premiums got deflated. And on average, how did they perform, right? So here we have our stats in front of us. Let's track 1,070 companies in the second quarter. 42% so far of the straddles had a positive return. So if we looked at it from the day before the company reported earnings, the next day at the close, the straddles were marked higher. 57% were lower, but on average, they gained 4.1%. So what does that mean? That when you have a straddle, right, if you're buying a call, buying a put, there could be a big move. So there's really an unlimited potential profit, right? So if it has a very big move, the profit on one could offset, right, all the losses on the other ones. And that's what we're seeing right now, that on average, they gained 4.1%. So let's compare that to historicals. So we see here 4.1%, on average, historically 0.7%. So definitely doing better than the historical averages. Let's narrow this down to the S&P 500. So let's just look at SPY holdings. Now we're looking at stocks that are part of SPY. Here we see 40% of those straddles were profitable, 60% were unprofitable. And on average, if you did all those straddles, 296 companies, it did all those straddles, on average, gained 2.8%. Okay, so you could see here, even though more frequently from the sell side, you would be a winner, but on average, you're a loser, because those that hit offset all those gains. So let's take a look at that 3-year average. So here we go. This is a 3-year average. Usually 34% of the straddles are gain, 66% are negative, and on average lose 3%. We could see here, second quarter, that those straddles have been performing well, up 2.8% on average. Okay, so that's S&P 500 stocks. Let's take a look now at the Nasdaq stocks. So I'm going to flip this. Let me see what other insights we have here. So you could see here, I'm also looking at the extremes, and this is showing which, let's just take a look at the really big extremes. So straddles these are the straddles that lost almost all their value. So that would be, whatever the straddle was the day before, stock didn't move, and the straddle lost between 75% or 100% of its value. So you could see that's consistent with the 3-year average, 3 and 3. But the straddles that lost between 75% and 50% of their value, that fell by a lot, by like half, almost, right? So on average, 22% of those, 22 straddles out of the same group on average lose between this much versus 12 this time around. The ones that gained, we could see here on the extreme side, those that doubled to 150% more. So those that gained 100% to 150% more, there were 9 of those versus 6 on average, right? So they're more on this side, those that gain between 150 to 200% more, and the really extreme over 200% so far won this earnings season. I'm going to turn to QQQ. So this is Nasdaq. Let me reload. So this is now looking at the Nasdaq stocks. Here we see a different picture. So 39% of those straddles were profitable, 61% were unprofitable, but on average, they lost 4.9%. Okay, so that's different than the S&P 500 stocks, just Nasdaq 100. Here we see that those straddles on average lost almost 5%. And compared to the 3-year average, that's significantly more. And here we could see the history, down 4.9% versus 3-year average 2.3%. And you can see here how they did quarter by quarter going back to 2019. So I guess, I'm going to stop there. We got some insights on the earnings performance, some insights on the earnings straddles, and Will did lose connection, so I can't take any questions. Hopefully, he'll resolve those issues tomorrow. But if you do have questions and you want to get them in for tomorrow, maybe email me, support@MarketChameleon.com, and I'll start covering those early in the morning. So everyone, thanks for joining. Stay safe out there. Have a great trading day, and hope to see you guys tomorrow.